Hello crypto enthusiasts, and welcome again to another brand new video. I hope you guys are doing great and your week is going smoothly. What I want to talk about here is going to be a tweet. It's from Paribus. I'm going to pull it up here. Okay, now this is it. It was uploaded on the 17th of January. Now this is going to be a very interesting thing. It's also a blog which I'm going to run through the blog itself. So I'm going to let you guys know on every single thing that has been going on lately. Now it states here conflicting narrative. Now they say with the recent rally in the market, some see this as the start of the next bull market. When we inverse the reported reasons for the upswing, we see several forces at play and many reasons to remain cautious, and that's a very important thing. Now if you see the war of the crypto market, the crypto space right now, it's anticipating a bull run in the Bitcoin and any other cryptocurrencies and every single thing, and it's a probably sounds for concern to be optimistic about the fact of that bull run, because a lot of things are gonna go in the right direction, because there's been a lot of bearish run lately. So I'm gonna pull up this blog and we'll talk about it to see what has been going on and everything that has been pretty much said so far. Now it's gonna be a 4-minute read. I'm gonna narrate every single thing that I've seen here, and also we'll get to learn from it. And if you like the video so far, drop a like for me and also subscribe to the channel, because it helps the channel grow every single time, and I appreciate you a lot. Now let's run into it. Now if the first year has taught us anything, it's that no one probably has a crystal ball when it comes to predicting future moves in the crypto market. Now macroeconomic factors and black swan events have time again overpowered technical analysis. Now this week China will celebrate the Lunar New Year, which already took place I think 2 or 3 days ago, and moved from 1 year to the tiger into the year of the rabbit. Hopefully already there are several confusing and sometimes conflicting narratives as to what the coming year will bring. Now many commentators are expecting 2023 to be beset by continued eruption in China. Now the narrative that is that there will be a third wave of COVID infection and people work or return to work at the end of January following the New Year festivity. Now at the same time, there's a narrative that infections are out of control and that China is massively underreporting its numbers of cases, and that may be true actually. That is a very cause for concern, may be true, but we can't just overinflate it or anything, because the COVID itself, was very devastating year for a lot of people, and a lot of people lost a lot, and a lot of people's lives were also lost. So it's probably a year people always want to forget, but it's probably written in the history books and not something we're going to forget anytime soon. Now based on the many controversies we have had with people from several of China's main cities, the narrative that seems correct is that cases are being underreported. Wow, that's really something for concern, because if this is underreported, then it's gonna be a very tough one to crack. Now everyone we speak has either recovered from COVID recently or is infected with the virus. Now the same is true for all of their colleagues and friends, and that is probably a picture of the China city. Now if this is typically of infection throughout China, it means they will achieve herd immunity by the end of January, which would rule out a third wave and increase the velocity with which their economy starts to recover. Now markets are already pricing in this increase in economic activities, leading to some of the recent rise in stocks we have seen. Probably have seen if you're I know everybody here are crypto enthusiasts, and they have probably seen the spike on a lot of ETFs and a lot of investment platform, or rising a lot of things in the probably inflation itself. And now naturally many in crypto focus on last week gains, but they appear to have missed the corresponding increase in liquidity in the stock market. Now last week MCSI African Specific Index hit the level of 21% high than its October low. That's pretty nice. Now the Hang Seng Index hits level 47% higher than its October low. Meanwhile, the Nasdaq Golden Dragon China Index surged 70% higher than its October low. That is a very serious spike on probably 3 of these index funds. Now that's huge. Okay, I will call them hedge funds for me. Now the reason this increase is largely due to hedge funds. Okay, I just probably said it now. Okay, now a lot of you are probably going to concern a lot of things. I'm going to jump into what hedge fund is in a moment. Now, due to hedge funds investment aggressively in China stock, after having come to the same conclusion we have, that the COVID pandemic in China will be a deep but short-lived. Now, the present situation appears to be the result of President Xi's intentional policy to remove restriction ahead of the new year so that COVID could run through the population at a time when their industries enter a seasonal slowdown. Now, while China economy recovery is bullish for Asian stocks and international companies, with companies in the country is also posed a threat to inflation. Now, increased activities in China means greater demand for commodities and energy, which may push price up and have a knock-on the effect on US and European inflation figures, and that's very how will I put it, sentimental or troubling. Okay, so we're gonna go to it. Yeah, so I was gonna go what hedge fund is. Now, hedge fund is a limited partnership of private investors whose money is managed by professional fund managers. Okay, those are hedge funds. Now, what they do is these professional fund managers who are wide range of strategies. Okay, now hedge fund is just a fancy name for a investment partnership. Okay, so that's what hedge fund is. It's another name for investment partnership, and that is what they have done in getting the index surge here in China, the 3 index we have seen so far. Yeah, now such an outcome could delay any pivot by central banks and increase the likelihood of a tougher recession ahead. This is where narrative get confused and demonstrates why the first half of 2023 looks set to be volatile. Now, although it's a welcome relief for many in crypto who sees some green candles of hope, it's imperative to remember that we are just a small boat in the vast ocean of global finance. That's very important. What we know, there's a lot of things, like it said in the beginning of the article here, that a lot of things have affected the technical analysis of the crypto market. So we're probably gonna look at more. Now, whatever the chart may show these have repeatedly broken down in the face of much larger macroeconomic stocks. Okay, now it says here that another factor that seems to have been underreported in January is the time when there is usually an increase in liquidity for risk non-assets. As we explained in the previous article, I'm gonna link it before, so you're gonna watch it. I'm gonna read it out. You're gonna enjoy the read. Okay, now many investors' portfolio have rebalanced at the end of December to show high allocation in low risk assets. In January, they once said rebalance their portfolio to take on high risk assets. As such, we see an outflow and inflow of liquidity into the market across both months, and that was really something that we probably looked out. Now, this inflow and outflow is going to be a very thing depending on how the investment goes. If the inflation goes high, there's going to be an outflow. Okay, and there's going to be an inflow of more investments in. Now, it's likely that the cryptocurrency will continue to rally until the next FOMC meeting at the end of January, where it's widely expected they will rise interest rate by 25 base points or 0 to 5%. It's also possible that we will accompanied by a stern warning from the chair of Federal Reserve, Jeremy Powell, that they will continue to raise rates aggressively if they have to, as markets have now priced in rebound in China economy and falling inflation in the US and Europe itself. Now, any that case doubt on the positive outlook will cause them to fall once more, and we hope that's not going to happen. Now, despite all the hopiums on YouTube at present, it's likely that there won't be any chance of direction from the Fed until March or April. Until then, the best thing to do is to remember to zoom out and take a long-term view to avoid getting rigged. Alright, that's probably a very interesting read here from Paribus, and it was amazing. Okay, there's a lot of things that's gonna go up and down, but what I'm gonna say to you guys is be optimistic about every single thing. Okay, don't let pessimism affect your decision, because sometimes we all see all these things, and a lot of things go right at the end. So you should be optimistic, but not let our emotion drag us from doing the wrong thing. All right, and I hope you like this video and you actually learned a lot out of it, and I appreciate you all that sit back to listen and also watch it with me, and I like you all so much, and I hope to see you guys in the next video.